A new era of finance, Bitcoin's place in your portfolio. Welcome back to the Economic Fallout, where we dive deep into the global economy, uncovering the forces shaping our financial future. Today we're navigating the turbulent waters of the cryptocurrency market, specifically Bitcoin. Some call it a bubble, a fad, a speculative frenzy. Others see it as the future of money, a revolutionary technology poised to reshape the financial landscape. So, the question on everyone's mind is Bitcoin just another speculative bubble? Or is it an essential asset that deserves a place in your investment portfolio? That's what we're here to explore today. The genesis of Bitcoin, from financial crisis to trillion-dollar asset. To understand Bitcoin, we need to rewind the clock back to 2008, the year the world watched in disbelief as the global financial system teetered on the brink of collapse. From the ashes of this crisis, a new idea emerged, a radical vision for a decentralized financial system, free from the control of governments and Wall Street. This idea took the form of Bitcoin, a digital currency built on a revolutionary technology known as blockchain. In its infancy, Bitcoin was dismissed by many as internet funny money. But something remarkable happened. Bitcoin didn't just survive, it thrived. Fast forward to today, and Bitcoin isn't just surviving, it's flourishing. It has emerged as a trillion-dollar asset class, embraced by institutional investors and even some governments. So what's driving this remarkable ascent? The answer lies in the unique characteristics of Bitcoin, characteristics that set it apart from any other asset class in history. Digital gold, Bitcoin's scarcity and value proposition. Now you've probably heard Bitcoin being touted as digital gold, but what does that even mean? Is it just a catchy marketing phrase, or is there real substance behind the analogy? Well, let's dig a little deeper. Gold has been a store of value for millennia. Civilizations have risen and fallen, empires have expanded and contracted, yet gold has endured, always holding a certain allure, a certain intrinsic value. Why? Because gold is scarce. You can't just print more gold, you have to dig it out of the ground, and that process is inherently limited. Bitcoin shares this crucial characteristic with gold: scarcity. The system is designed so that there will only ever be 21 million Bitcoins in existence. This built-in scarcity is what gives Bitcoin its value proposition, its potential to serve as a store of value in an increasingly uncertain world. Unlike fiat currencies, which can be printed endlessly at the whim of central bankers, Bitcoin is, by its very nature, deflationary. Its supply is fixed, meaning that as demand increases over time, its value is likely to appreciate. In times of economic turmoil, people have historically flocked to gold as a safe haven. But today's digital generation is seeking a modern store of value. Bitcoin in many ways fits that bill perfectly. In fact, if we look at the data, Bitcoin has dramatically outperformed gold over the past decade. Let's talk about inflation, the silent thief lurking in the shadows of our economy, eroding the value of our savings, our wages, our financial futures. Central banks worldwide, especially in the wake of the 2008 financial crisis and the more recent COVID-19 pandemic, have been printing money at a staggering rate. But this comes at a cost. When you increase the supply of money without a corresponding increase in the supply of goods and services, you inevitably devalue the currency. Bitcoin, on the other hand, is immune to this kind of manipulation. Its decentralized nature means it operates independently of the whims of central bankers and the often short-sighted policies of governments. This is where Bitcoin shines as a hedge against inflation. Its fixed supply, its inherent scarcity, acts as a bulwark against currency devaluation. In countries like Argentina, Turkey, and Venezuela, nations grappling with hyperinflation, we've seen a surge in Bitcoin adoption. People are desperate to preserve their wealth, to find a life raft in a sea of economic uncertainty. Bitcoin has emerged as a beacon of hope in these troubled waters. Now let's talk about diversification, a fundamental principle of investing. You know the saying, don't put all your eggs in one basket. Well, in the world of investing, diversification is your basket and your assets are the eggs. Bitcoin, despite its volatility, offers a powerful diversification tool for the modern investor. Why? Because it has historically exhibited a low correlation with traditional assets like stocks and bonds. What does this mean in plain English? It means that when the stock market takes a nosedive, Bitcoin doesn't necessarily follow suit. In fact, during certain crises, Bitcoin has shown remarkable resilience while traditional markets tumbled. Remember the COVID-19 crash of March 2020? While the Dow Jones plunged by nearly 30%, Bitcoin not only recovered quickly, but went on to reach new all-time highs. Now, I'm not suggesting that Bitcoin is immune to market forces, or that it's a guaranteed path to riches. It's not. It's a volatile asset, and its price can fluctuate wildly in the short term. But that's precisely why diversification is key. Adding even a small allocation of Bitcoin to a diversified portfolio has historically improved risk-adjusted returns. Not so long ago, Bitcoin was relegated to the fringes, the domain of tech enthusiasts, libertarians, and the occasional curious investor. It was a playground for early adopters, a digital Wild West where fortunes could be made and lost overnight. But the landscape has shifted dramatically. Wall Street, the very institution that Bitcoin was designed to circumvent, has come knocking. Financial giants like BlackRock, Fidelity, and even the venerable insurance behemoth MassMutual have dipped their toes into the Bitcoin waters. They're not just dabbling, they're making substantial investments, offering Bitcoin-related services to their clients, and integrating this digital asset into their long-term strategies. Corporate titans like Tesla, Square, and MicroStrategy have added Bitcoin to their balance sheets, signaling a growing acceptance of this digital asset as a legitimate store of value. Even governments, once wary of Bitcoin's decentralized nature, are coming around. El Salvador made history by adopting Bitcoin as legal tender, and other nations are exploring similar paths. This institutional adoption is a watershed moment for Bitcoin, suggesting that it's no longer a fringe experiment, but a force to be reckoned with in the global financial system. So, let's recap what we've learned about Bitcoin's role in the new financial landscape. We've explored its origins in the ashes of the 2008 financial crisis, its emergence as a trillion-dollar asset class, and its unique characteristics that set it apart from traditional investments. We've delved into its potential as digital gold, a hedge against inflation, and a powerful diversification tool. And we've witnessed the institutional wave sweeping the globe as Wall Street embraces Bitcoin, signaling a seismic shift in the financial. Is Bitcoin a speculative bubble or an essential asset? Drop your thoughts in the comments below, and don't forget to like, subscribe, and hit the bell icon for more content on the economic forces shaping our world. This is Paul, signing off from the Economic Fallout. See you in the next video.